Hey guys, what's going on? Welcome to the video. So we had a volatile week in the stock market, and in this video we're going to be going over what to expect next in the market, including an updated outlook on Bitcoin and the top trade ideas that I am watching in the month ahead of February. As always, there are timestamps in the description. Now let's go ahead and get into it. So starting out by taking a look at the S&P futures chart, and what played out last week was on Monday the market had a large sell-off on the DeepSeek AI news, and this led to a sell down all the way to the 5950 to 5960 zone, where it was able to find support. From there, it had an initial snapback rally back to 60.35 to 60.40, which it was later able to reclaim and hold as new support, and then from there grinded higher into Friday up to 61.02 to 61.12, which acted as key resistance and triggered a breakout move above it, and that followed through nicely before more tariff news came in, and the market got that violent afternoon sell on Friday. So this sold down to the 60.60 to 60.75 zone, which has held as support so far. So zooming out, this overall continues to be part of a larger choppy consolidation phase below the all-time high at 6163.75, which would be the breakout trigger above to new all-time highs for the market. Into next week, the key support levels to watch on the downside are at 60.35 to 60.40, 59.85 to 59.94, and then 59.50 to 59.60, where I would continue to lean bullish and buyers in control of the trend as long as above there. Key resistances on the upside are at 61.02 to 61.12, where a breakback above there can open upside back towards 61.36, then Friday's high, and then 61.63.75 all-time high, and breakout trigger above there. Taking a quick look at Bitcoin, the same pattern continues to build out within this consolidation. Last Monday's sell held right where it needed to, which was another successful backtest of the trendline as new support. And if we zoom in, this current consolidation range within the larger one has been building out for about 3 weeks now, and is likely for a break soon. I would watch for it to hold above 100k from here in order for it to stay tight, and 106k to 108k on the upside as key resistance, which can start the next leg higher on a break and hold above. If it fails back below 100k, that may signal some more volatility and time to build out the larger consolidation pattern. Alright, so now taking a look at the top trade ideas that I'm watching in the month ahead, starting out with Adobe, ticker symbol ADBE. So this has been a heavily beat down stock after its drop from earnings, which broke below the long-term trendline support, which led to a sell down to near $400 per share. It bottomed in mid-January and is now at a key decision point for the trend at the 451 key level, which has acted as a major historical pivot. If we zoom in, we can see that it's potentially building out an inverse head and shoulders pattern just below that level, where a break above 451 triggers the breakout and opens further upside for the stock. A break above there can target the 50-day moving average at about 467, and then 477.19, and then the key 500 to 506.5 zone next above there. Another stock that is on very close watch for me in the month ahead is TWST Bioscience, ticker symbol TWST. So taking a look at the long-term chart, we can see that the stock has built out more than a 3-year long inverse head and shoulders pattern with the top of the range and potential breakout trigger at 58.85. As we know, the longer that a pattern is formed, the more energy that is built up, and this can result in a very large breakout move if it plays out. So this is the long-term visual, and a break and hold above 58.85 triggers the move, which can then target 71.85 to 73.75, and then 90.5 as the next key resistance levels above. If we zoom in on the chart, we can also see that it built out about a 6-month long consolidation pattern, which it is now attempting to break out above for the second time. So holding above 49.45 from here keeps that range breakout intact, and it needs above the recent swing high at 54 for the leg higher, which can target that major 58.85 level next. The company also reports earnings before open on Monday, so expect some early week volatility, and there's potential for a gap and go move if numbers come in strong and is able to break above $54 per share. Another stock that I'm watching closely into next week is GE Vernova, ticker symbol GEV. So we've gone over this stock a few times in the past as it built out these two large and well-defined consolidation patterns, which resulted in clean trades and strong moves higher for the stock on the breakouts. On Monday of last week, the stock had a large downside reaction to all of the DeepSeek news due to this company being associated with the AI trend, and a gap down back into the previous consolidation, which it was able to hold the bottom of that range as new support. From there, it broke back out of the top of the previous range, which resulted in good follow-through higher so far. So the main thing that I am watching into next week would be a backtest of that zone as new support. The top of the range at 354.8 also lines up with the 50-day moving average, so this is a major spot, and if we get that pullback to backtest that spot again, it will be a major decision point for the stock. If buyers have a good reaction on the test of that level, this would be a great dip buying opportunity and can continue its grind higher afterwards towards the gap fill at 415.7, which would be the main target. If 354.8 gets tested and there is not a strong reaction from buyers though, this would be a no touch for me, and you would want to play with a tight stop loss back below the 50-day moving average or a little bit below there. And two more important earnings reports that I would keep a close eye on in the week ahead include Google on Tuesday afternoon and Amazon on Thursday afternoon. So we've gone over these as some of the best looking mega caps over the last few months, and they've continued to be strong and hold up very well on broad market volatility and dips in tech, which is a major sign of strength and have a great chance to continue higher in my opinion. So on Friday, Google was attempting to break out of its range above 203 with a nice follow through so far. So this will be the key level to watch into next week in order to keep the breakout intact. If it holds above, expect it to head further into all-time highs, or if it sees a downside reaction at earnings, that would be the level that either needs to hold as support or that needs to reclaim back above to restart the breakout. And Amazon has followed through very nicely after breaking out of the well-defined bull flag pattern that we went over a couple weeks ago, including another successful backtest of it as support on Monday's gap down. This is another setup that looks likely to move into new highs once again, and we can watch for a break and hold above 240 to start that next leg higher. Earnings can be more of a toss-up on this one, though I would be leaning bullish, and if there is a dip, the levels of interest for a dip buy would be at 225 to 226 and 216 to 220. So that's everything that I'm watching for in the week ahead. There is a good chance for volatility to continue with all of the earnings coming up, along with all of the tariff news and everything like that. So be prepared for anything from the market, but of course, volatility brings opportunity. Thank you guys for watching, and for anybody interested in joining the private Discord chat, that is the first link down in the description to get my personal trade alerts, nightly watch lists, and I answer any questions you guys have in there. Good luck trading the week ahead, and I will catch you all next time, and peace out.